Hey everyone, you're probably already aware that there was a big leadership change at UiPath with the previous CEO resigning and the founder stepping in as CEO again. Well, the new CEO made some pretty meaningful comments here that sound a pessimistic tone for UiPath stock investors. Now, while this video might seem pessimistic, I want to remind UiPath stock investors that I have UiPath stock rated as one of my top stocks to buy. Still, in every investment I consider, I always look at the bear case. I always look at the downside. I want to know and be aware of the risks I'm taking with any investment. Even if I'm bullish on the investment, I still want to consider the downside. So let's take a look at these surprising statements from the new CEO. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so the CEO saying that we don't expect the macro environment to improve materially in the near term, and we believe it is prudent to guide assuming the variability we saw at the end of the first quarter will continue. And this will also take into account the leadership transition, which can create some short-term disruption. In other words, UiPath CEO saying that things were not going well at the end of the first quarter, and we don't think that's going to improve. We don't think that trend is going to improve in the near term. On top of that, we had a leadership transition, which is not going to make anything easier. So that's why I suggested that this was not good to hear for UiPath stock investors. And you can understand the stock price was down over 30% in reaction to the company's earnings release and the subsequent conference call where the new CEO discussed the prospects of the company. But let's dig deeper here. Let's try and understand more. So the CEO is saying, as we look to the future, we're laser focused on enhancing our execution, including improved sales and deal scrutiny, driving higher efficiency across sales and the broader organization, and driving a deeper and more execution-oriented strategy for our growth products. Goes on to say, we plan to go back to our roots, building a truly customer-centric organization where co-innovating with our customers and partners is at the heart of everything we do. Now, this is a change in strategy. So the previous CEO had a certain strategy that they had implemented, and now the founder/new CEO, which was also the former CEO, is coming back now before implementing a change in strategy again. So that's a lot of disruption, right? You had a CEO that was in place only a few months, and now the founder is stepping back into the CEO role following the sudden departure of that temporary CEO. So regardless if this new strategy is an effective one or not, it's too early to tell if it's going to be effective or not. Just the change is enough to cause disruption. And so that's what the CEO was alluding to earlier, saying that the leadership transition will create some short-term disruption because the previous CEO had the company going in a certain direction, and now the founder is coming back in, and it's going to take the company in a different direction, especially, it seems, as it relates to sales, especially as it relates to the sales strategy. So we'll find out if these changes are going to have a big impact, positive or negative, on the company going forward. It's volatile, to be sure. It's risky. It's now a riskier company, and the stock price decrease adjusted for that. It offset that. The stock is now trading at a more attractive valuation to account for this fact, right? The underlying business is still strong. The underlying foundation of the business, offering enterprises automation services, is still a great business to be in. That's why I've recommended the stock as a buy to begin with, because with the cost of labor increasing as quickly as it is, Businesses are more interested than ever to create these automation services, to automate as much as they possibly can within their organization, because the cost of labor is increasing by so much. It's hurting a lot of businesses. It's stifling growth because they can't hire as many people as they would like to, because their revenue does not support more folks to be in the business, but they have a lot more work. And so if you can automate some of that work, it will help these companies grow. The CEO goes on to highlight some of their large language models called DocPath and CompPath, which combine the best of generative AI and specialized AI to empower our customers to understand and process any document and a huge variety of message types. And it helps businesses improve the accuracy of generative AI models by extracting information from company-specific data sets. That's the key here, company-specific data sets. For most businesses, these large language models are not that useful, not that helpful. For my business, specifically for what I do on a daily basis, those general large language models like ChatGPT are close to useless for me, very close to being useless. I find little help from their services, the way they're programmed at the moment. However, if I could incorporate all of my data, all of my research that I've accumulated over the years on the companies that I follow, on viewership data, on all of this information, right? If I can incorporate that into the large language model and extract information based on my specific use case, that would be so much more useful for me. I don't even pay the $19.99 fee right now for the upgraded version of ChatGPT or any large language model. But if I could have a large language model based on my specific company data set, my specific use case, I would be willing to pay a monthly fee that's much higher than even these large language models are charging. So the big key there is company-specific data sets. That's where most businesses will generate the most value, is using their own data to get insights as to how to serve their customers better, how to serve their customers more efficiently, more effectively, and improve the customer value proposition while also lowering their costs simultaneously. That's the key, and UiPath is helping businesses with this transition, with this task. And even though there was disruption at the top of the organization, likely due to some disagreements here, the underlying foundation of the business, I feel, is still strong, helping enterprises automate their business, find tasks within the business that can be automated, find tasks within the business that you can help companies develop and extract information from their data sets. That's increasing in value right now. That's increasing in importance with businesses worldwide. So while the near term, the CEO is sounding a pessimistic tone, longer term, I think the customer value proposition of what UiPath offers is an excellent prospect. They have excellent prospects going forward. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.